Self-managed super fund or SMSF trustees generally prefer to invest in direct equities rather than managed funds. However, exchange-traded funds or ETFs may now allow them to access the benefits of managed funds with a direct equities feel. Michael Krause has joined me in the studio today to talk about the opportunities ETFs can offer. Welcome, Michael.
Thank you very much for inviting me.
What exactly is an ETF?
An ETF is a hybrid instrument. It's an index fund that tracks an index of stocks, but unlike an indexed managed fund, you're able to trade it on the exchange during the day. And they typically offer a little bit more flexibility than your typical index fund because not only can you, again, trade it during the day, but also because you have the ability to, for example, sell the index short and maybe get rid of some exposure that you don't really want. And you also have, you're starting to have a lot more choices in the indexes that you can select from. So a great amount of flexibility there.
And what are the benefits of buying an ETF?
There are several benefits, but they can kind of boil down to, again, that flexibility, especially the transparency in an ETF, and certainly the efficiency in terms of its low cost, and they're typically very tax efficient for investors. But coming back to the transparency, an ETF is kind of unique in that, unlike a managed fund, its holdings are public information and must be at all times, and therefore an investor knows exactly what they own. And so you don't really have the risk where when you have several managed funds, you may have more holdings in common than you realize. With an ETF, that's not going to happen unless you want it to happen because you know exactly what it holds.
So which exchanges can investors access through an ETF?
Well, here in Australia on the ASX, there's an increasing number of ETFs that are actually cross-listed, for example, from the United States. So not only do you have the ability to obviously invest in the ASX 200 index of stocks, but also through for emerging markets or European stocks as well as U.S. stocks. They're all cross-listed here. It makes it very easy for investors to get global equity exposure simply by executing a trade as they normally would here on the ASX.
And what currencies do investors need in order to buy an ETF?
Well, anything that's listed here in Australia will be also quoted in Australian dollars. Obviously, investors have to be aware that if they are buying stocks that are denominated of companies in foreign currencies, then they may have a sort of a need for hedging or sort of a currency risk at a minimum. So if you are investing, for example, in the S&P 500 ETF, well, that's all U.S. stocks, so it's a very simple hedge, U.S. dollar versus Australian dollar. But a lot of times you have ETFs with multiple currencies in it. For example, the Emerging Markets ETF, again, is going to hold a whole bunch of different companies, all denominated in different currencies. They're translated and quoted back in Australian dollars, but you've got to be aware you've got a whole bunch of currency exposures going on.
So what's the range of ETFs, and what are some of the newer offerings in the market right now?
The assets in ETFs, as well as the number, is really increased rapidly in recent times. Some of the newer listings are from the iShares and Vanguard, which allow you, again, to access foreign markets. And not only U.S. stocks, but you can also divide into large cap, mid cap, small cap, European stocks, if you will, or Japanese. You can choose oftentimes various countries. And there are also, of course, the exchange-traded commodities that open up a whole new market for investors that sometimes was difficult to access from a regular retail account. Now an investor can go into any of their online trading, usually, and execute a trade in a commodities market through some of these exchange-traded commodities.
And how do you go about choosing the right one?
You look at a lot of the underlying metrics, and there's not necessarily a correct answer. The correct answer has to do with, well, is this really appropriate for me? Am I a earnings momentum type of investor? Does that fit my portfolio? Or am I a deep value kind of, or growth at a reasonable price? Whatever it is, all those things can be known for an ETF. So you screen on those metrics in very similar way that you would screen for a single stock to see, does this really fit my, or if you're an advisor, does this fit my clients, goals and objectives.
So how good a fit are they for the SMSF investor?
I think they're a pretty good fit. Well, one of the things that a self-directed investor has to keep in mind with an ETF is that it is just a basket of stocks. It's just supposed to track that index. There is no manager making decisions on your behalf. So an index fund, an ETF, does not go bargain hunting in a beaten-up sector. It doesn't sell technology stocks or what have you when they're too hot or anything. So that really shifts the burden on the end investor to continually monitoring. They are a powerful tool, but of course you can shoot yourself in the foot with a powerful tool. So it shifts that burden back to the end investor, allows them to be in charge, but again, they have to take charge and can't just sort of put it away and trust that somebody is making decisions on their behalf, because there is nobody making those decisions.
Thanks very much for your time today, Mike.
My pleasure. Thank you.